Welcome guys. So today I want to take you through and talk you through my current stock portfolio as of the 30th of November 2023. So it's been an interesting year for the stock market. I've never previously discussed or shared details of my current portfolio, but what I can tell you is that I am an avid investor in stocks and shares. So in this video I want to cover where I've got some investments and holdings. We'll look at the stock market in general over the year, and then we'll also talk about some of those individual holdings that I have and what my aspirations are, what my goals are, wrapping up 2023 and looking forward to 2024. So without any delay, let's go straight into my brokerage account and we'll go through some of the holdings that I have and we'll look at the current portfolio of stocks that I currently own. So guys, you can see right now I'm in my stock brokerage account, which is with Hargreaves Lansdown, and you can see the total portfolio that I have, which is currently sat under stocks and shares ISA. Now, I've talked previously about ISAs, but ISAs are a great way to shelter your investments from tax. ISAs are essentially tax-free. So before we dive into the detail, you can see the total value of my stock as of today, the 30th of November 2023, it's £19,408.25. And you can see I've also got cash on hand of £150.16, giving me a total value in my stock brokerage account of 19,558. Now, this value doesn't really mean anything until you start to break it down. When we go into portfolio analysis, we can start to get an idea of exactly the type of holdings and the different holdings that I have. So here you can see I've got 99.3% of all funds allocated to international shares. I only hold 0.7% in cash. And that's a good thing for me because I don't like to hold a lot of cash given the current high inflation rate environment we currently find ourselves in. Although inflation is coming down, I'm looking to see a good return on my capital, and hence why I'm looking to fully invest as much of my liquid cash as much as I earn and as much as I can save into stocks and shares. So here's a breakdown, here's a split. You can see the majority of all my holding is currently in Microsoft, just over 61%. Second is Apple, just under 31%, followed by McDonald's at 4.5%, UiPath at 2.8%, and obviously cash at 0.7%. Now, this is me having restarted my investment journey earlier this year and toward the back end of last year, but I really didn't start to take it seriously till earlier at the start of 2023. So I do expect these numbers to change and I do expect this list to grow. So I hope you can follow me on my journey and I can take you through some of the successes, some of the failures, and some of the learnings that I'm having throughout my stock investment journey. So now if we look at the stock portfolio history, you can see all of the purchases and transactions that have been taking place. And as of recent, especially in November, you can see I bought some Microsoft, Apple, and some additional Microsoft shares, especially given the rally that we're seeing in Microsoft stock at the moment. Now, if we go back to the overview, we can actually break down our stock portfolio and see the exact gains and losses on each and every one of these individual holdings. So you can see Apple, I hold 40 individual stocks or 40 individual shares. You can see how much is valued today, and the gain on that holding is currently up 6.8%. So I've only gained £382.31. So this is recent investment, guys. I've only started seeing some of the gains on this. And if you look at Apple, generally speaking, Apple share price, you'll see that as of say year-to-date basis, Apple share price has actually increased significantly well at 51.4%, and I expect this growth to continue. You can see it's plateaued somewhat since the 31st of July. It's kind of declined, but then since the 27th of October, we've seen a pickup in the share price again, almost returning to an all-time high. And the interesting thing about Apple here, and this is what's important to know, is that you need to know the company dynamics. Investing in a company isn't enough nowadays. You need to be clear-headed about what you're investing in and know fully well what that investment entails you for and literally locks you in for, because you are buying into a company, not just in terms of its share price, but its ethos, its values, its strategy, and its financials as well. So the big thing coming next year from Apple, at least, is this new VR headset. And I genuinely believe it will open up a lot of new avenues, especially for Apple as a new income stream. So you can see this is its first iteration. It does look really, it looks a bit funny to the eyes. It looks a bit funny to look at. And yes, it is definitely a very bulky unit. But as with all things, technology-wise, the first iteration or the first model always sets the way and paves the way for further models down the line, which are much more improved. And what I expect to see in future is these units to become much slimmer, much more, how do we say, mobile in terms of use, and much more comfortable. And more importantly, the software that comes with it and the technological advancement to increase as well. So I'm genuinely excited for Apple and their headset, up and coming headset release. But I genuinely believe holding and investing in Apple is a great investment. And the other big thing of note is that Apple stocks are currently held by Berkshire Hathaway. In fact, I believe Berkshire Hathaway own almost about 50%, somewhere around the region of about 50% of all of their holdings. Here we go, 51.91% of all of their holdings in Apple. So Apple, in my opinion, is a great buy. Apple stock price, and if we just look again, we can see the dividend yield as well. It's 0.51%. It's not fantastic, but nevertheless, you still earn a nice little dividend off Apple share price, off the Apple stock. So in future, if we look at the max growth here, I mean, obviously this is preceding even my time here. You can see the Apple share price has grown significantly well, but it also mirrors the, I guess, the meteoric rise of many other tech stocks as well, especially in the Nasdaq. So we can see clearly a growth like Apple, a tech stock like Apple is clearly following along that kind of trajectory of many other technology companies. So Apple will be a stock I will continue to buy. I will definitely continue to hold, and if anything, I will be buying more of in the near future. The other big one is Microsoft, but we'll come on to Microsoft in a moment. We'll look at McDonald's first. McDonald's is an interesting one because they've actually had an interesting year, and if we look at the share price for McDonald's, we'll see that McDonald's have actually seen somewhat mixed kind of results. If we look at year-to-date basis, they're up 6%, which is not phenomenal, but you can see the share price was fairly flat, increased during the second quarter of the year, but then it fell back down again, and now it's on its way back up. So the reason why I invested in McDonald's is because during any economic difficult times, McDonald's is one of those brands where people flood to and still continue to purchase and consume from. Especially given the cost of living crisis that we're going through, people generally cut back on spending and stick with cheaper brands and more cheaper, affordable lifestyles, which McDonald's very much caters for, especially given how cheap their menu items are compared to more established brands who are in the food space. And here you can see McDonald's have a dividend yield of 2.38%. So they're a really good dividend stock, and I plan to hold on to McDonald's for the foreseeable future as well. I may not necessarily buy any more stock at this rate, but we'll see. I want to spread the risk, so I may end up buying a few more shares of McDonald's, but we'll see how they perform over the next coming few months. The other big one is Microsoft. So here you can see I own a substantial holding in Microsoft, and as of today, I've got £10,691 in Microsoft. And I'm very proud of that, the fact that I've actually seen a return of 12.1% on my investment. That's returning me £1,294.70. Now, what's happened here? Let's go into the detail. What's happened really is that Microsoft have managed to jump on this trend that we're seeing with AI and ChatGPT. So what's happened in the last several months is that we've seen the launch of a new AI product by a company called OpenAI, and Microsoft have very much found themselves invested with OpenAI in terms of partnership.
Simply put, Microsoft loves OpenAI.
And this has allowed Microsoft to really pave the way and lead first on this revolution we're seeing in AI, and which will soon become even more advanced in the near future. So all the buzz and hype we're seeing with OpenAI is benefiting the Microsoft share price. And if we go back again to the Microsoft share price real quick, you can see it's grown phenomenally over the on a year-to-date basis. You can see it's grown 58%, and I expect that to grow even as we end the last few days of November, and as we go into December. I expect this Microsoft to continue to grow for the next month, and definitely in the next few quarters that we have coming up. So Microsoft, I expect, will hit about $400 per share. And again, I think it's a really, really good buy. I think if you're looking to invest, Microsoft and Apple are definitely two stocks to consider. And the other good thing is Microsoft pay a slightly higher dividend yield than Apple do at the moment. So 0.79%. I'm really interested, really hyped and excited for Microsoft, and I'm keen to hold my stock with Microsoft, my holdings with Microsoft, and continue to invest and buy up more shares in the near future. The last one I want to mention, though I'll cover another day, is UiPath. UiPath are also an interesting one. Similar to McDonald's, they've actually had an interesting year, and if we look at the share price, it's not been great. So if you look at on a year-to-date basis, let's just be honest, it's been up 61%, but it's actually fluctuated up and down quite a lot throughout the year. So it's been one of those stocks that makes you feel nervous when you hold it, and it's not a dividend-paying stock either. The reason why I bought UiPath is because I believe in their product. I've used their product before. They're a software company. They help with automation, and automation is something we're seeing as part of this huge wave and trend in AI as well. I bought 35 shares in UiPath that were quite cheap, to be honest. £500 gets me 35 shares. I'm actually hoping that UiPath and UiPath as a company get acquired by a larger giant in the near future. Maybe Amazon, maybe Apple, maybe Microsoft, or maybe Google will look at UiPath and think, you know what, we fancy a slice of that. We'll buy them out, we'll acquire them, and I'll hopefully see a bumper pay rise at the same time. So guys, that wraps up all of my portfolio. I hope you found this interesting. I will do more of this style of video. If you want to see more of this kind of content, do let me know. Drop me a comment below. And yeah, I want to give you guys a view of my current portfolio of stocks, and 100% I will be investing in more, and look forward to seeing more exciting developments coming up very soon. And do like, comment and subscribe to the channel if you want to see more content around stock investing. Thank you guys for watching. Take care, and I'll see you in the next one.